And there's an interesting dynamic that we've seen. We've always had a NexGen panel. We've had NexGen summits. So if Phil Kessler could come up, he's been working with many NexGens, and including John Havens, whom you saw earlier. And I'd ask Zach Nasser to come because he's working with NexGens. Zach Nasser, the man, in Abu Dhabi and Dubai, which is an interesting dynamic as well. So over to you, Phil.
Is this working? Oh, great. My name is Phil Kessler, and I'm a recovering attorney. Thank you. No, so I got advice from a mentor years ago. He told me two things when I started in private practice. He said, one, don't put the tattoo where the judge can see it. And two, don't do the panel right after lunch. 1 out of 2 is not bad. Okay. All kidding aside, there's been a lot of interesting speakers and things that have happened so far this morning, and if you're interested in that or anything, whether that's economic development, whether that's the future of work, whether that's where to place your money and investments, then I think you need to be thinking about next generation. So SWS Partners is a boutique investment management firm. We build portfolios for institutional investors as well as what we like to refer to as the uniquely wealthy. And I think paying attention to where the third, fourth, and fifth generations of family offices and different folks are going with their money is extremely informative when you think about how you want to approach the things that you're doing. So I know John's already, I asked John to be up here for a couple of things. One, because you've already heard him talk about some future work approaches, but then more importantly, if you think about investing in Ohio, his family's doing some interesting things with private equity and roll-ups in one of the verticals that they're involved in. And then Zach with a completely different approach to how folks in the Gulf are thinking about deploying venture capital, and he and I were talking a little bit earlier, a lot of it in the United States. So getting an understanding of where they're looking because of the size of the dollars that they can write, I think is very informative with thinking through that process of where do you want to be in the venture capital lifestyle, whether that's, the pre-seed all the way through the alphabet rounds. So typically I'm trying not to talk too loud. I'm just like raise the voice. All right, on that note, I thought, John, if you could just give them a little bit of background on Watermark and a snippet of what you're doing locally as far as the roll-up.
Yeah, sure. So nice to see you guys again. We're a third-generation family office, kind of started with my grandfather, and we're unique in the sense that population hasn't exploded, right? So it went from my grandfather, I have my father, 2 aunts and an uncle, and then there's only 5 in my generation, including my sister and my 3 cousins. So it's very it's been able to stay very tight-knit. Like I talked a little bit earlier, we have investments across industries, but it's much more kind of old school. Like we don't do a bunch of venture, we don't do a bunch of early stage. It's more operation companies in what we see as recession-resistant, repetitive business, right? So like I talked earlier, plumbing, drain cleaning, and HVAC is amazingly recession-resistant, and it's something that everybody in here uses. So my father bought Waterworks in 1986. It was 4 trucks. And that was kind of his little bailiwick. And over time, grew up, made all the mistakes. He was going to sell it about 3 years ago. I worked with him, put together the sim, and we were about to go out and shop it. And you're sitting there looking at what happened in 2007 through 2009. We grew sales by 30%. During all the major downturns, we've always seen an upturn. Because it's necessary work, and I guarantee you anybody in this room, if your AC doesn't work or if your toilet's clogged up, it's the first call you're making. And so we said, hey, why don't we double down on this? Let this be the platform for this generation to jump in. And so family contributed cash, out raising more outside cash. Family accounts for 54% of the entire raise. And so I think we're doing things a little differently in several ways. Firstly, it's starting off with a platform company. So you already have operational experience, right? I think a lot of times the competition that we're running into out in the market, because HVAC roll-ups are very popular, but they're all guys from the coasts. They don't understand the interior of these companies. They don't understand necessarily the blue-collar workforce and how to relate to them. We do. I think that's a great advantage in the Midwest is it's not sexy, right? Venture's sexy. You get to do all the really cool stuff, man. You know, and that's awesome. And there's a place for that. But it's okay to have both. You know what I mean? So that's kind of a 30,000-foot view. And I can tell you that, for example, we're making an acquisition up in Cleveland. They had an offer that was more expensive than our offer from a firm in Philadelphia. They went with us because we're able to talk that language, whereas a lot of people aren't, right? You're on the inside. You know you're protecting legacies. You care about the people. And so I think that's something that, you know, we're often referred to as the flyover part of the country. But I think that's where a lot of, it's really the backbone of the country, right? It's reframing the conversation, just like we were talking about earlier. And I can talk for forever, too. So just tell me to shut up at any time, Phil.
No, look, it's obviously we're a lot of us are here have come through. So I spent some time on Wall Street, and I worked for guys who were the quintessential, you know, the T-shirt that says New York and then Hudson River and then L.A. Like there's nothing in the middle. And they couldn't understand why you couldn't have breakfast in Cleveland and lunch in Cincinnati. I was like, well, it's a little bit bigger. But it is something to think about. All kidding aside, we see quite a few requests, introductions, folks from both coasts that come through our firm looking for investments, looking for introductions, looking for opportunities. And to John's point, it is a little bit of understanding the kind of the narrative in country, how fast capital moves, how quickly people make decisions. So there is a lot of opportunity, but I think you need to understand that this isn't a Dallas, right, where you're doing multi-million-dollar deals between, you know, courses at lunch. It's just a very different approach. Not that you can't get it done, not that there is an opportunity, but the better you understand how business happens and who you're doing business with in this neck of the world, I think the more successful you can be. And then you get to what Zach's doing and showing up with institutional level private capital, and it's a little different conversation as far as looking for investments on your end.
Thank you. I'll share something a bit different flavor about like the dynamics in the family and the portfolio overall. I guess I shared the sexy image before, but there's more to that. Obviously, the foundation is a conglomerate group with many traditional businesses, right? In real estate, oil and gas, some car dealership exclusivity, you know, like Mercedes, Jeep, what else? Clinics, some hotels. Like it's really diverse, like most industries, you could say. Furniture, art gallery. Yeah, I can't, like, there's just too much. There's a generational divide as well, like in the approach to things. So my partner in venture capital, she's like NexGen, right? Like as far as like age group. And with her, we lead like venture capital and like all the sexy and like passive investments, you could say. But her parents' generation, they're used to being more hands-on, right? And themselves leading JVs or like quote unquote private equity level deals, right? I'm talking $150 million plan to process corn, for example, and examples like on that league of things. Like they want to be involved, they don't want to be just like passive. So with the next gen, you know, kids, you could say they're trying to bring in this new wave of doing things, right? Of like venture capital, angel investing, usually with the promise like, oh, you could JV later on, right? That's the promise that we need to still make so that, you know, things get funded quickly and like with passion, I guess. So there is that like shift that's happening. Another unique thing in the family, my partner is more or less as savvy as a financial professional. She also manages a lot of fixed income for ADIA, which is the sovereign wealth fund in Abu Dhabi, focused on like passive investments. So we don't really So we have a diversified portfolio as you'd like. We're not using an external firm to do it because we're able to do it ourselves, in terms of fixed income, public equities, etc. So that's a unique thing as well, because usually in a family, you have expertise in your, conglomerate areas, for example, the business units you're running, but the, traditional financial management, you outsource it to someone else outside. So that doesn't happen with us. So we have these different components, right? You have the generic high-level portfolio management, 40%, in bonds and fixed income, and then you have the sexy VC side and taking risks and helping companies at the early stage build out and all that. And you have the traditional businesses still being launched to this day, right? In traditional verticals without any sexy technology. So that's like the dynamic in the family.
I guess the question too, so this is one thing that's beginning to come up that we're seeing. We'll keep cogs in at time here, but there's a lot of impact investing, and Mark alluded to it. And so I've been at this now for 25 years, but it's only been in the last, this generation that's come up, so maybe John's age, maybe a little bit younger, where historically maybe a family office, and we'll continue to pick on them, would have looked at investing and maintaining the family's wealth as one bucket, and then kind of the social good aspect as another, right? That was foundational work, gifts to charity, board memberships, et cetera. What's been interesting to watch as this generation in their 20s and early 30s has kind of evolved and started to get involved in the decision-making process. This thing doesn't like me. I know, it's fair. Whoa, now you can hear me. The conversation is getting to, can you combine the two, right? So it's interesting. I think there's been a conversation among some of the ultra wealthy around, do we leave our kids money or not? And I think that's fine for headlines, but the reality of it is the vast majority are still transferring money down multiple generations. And yet you have this group coming up that's looking at things and saying, okay, well, we don't necessarily want to get rid of this and change our lifestyle, but at the same time, we want to feel good about the stuff that we're invested in, and how do we do that? And it's been and it'd be interesting to get the two years' take on it, because it used to be back in the day, you'd say, well, you can change your portfolio, and you can not hold certain investments, and your returns look like this, and you can hold those, and your returns can look like that, and they're, whoa, okay, we'll check that. And that mentality has changed immensely to say, okay, we're willing to see a certain level of underperformance, or we're willing to wait a little longer for that impact from the investment if we can do the kind of things that we believe in, and that becomes the driver behind where they're placing their capital. So I don't know if that's true with your second gen or how they're thinking about it.
There's a lot of autonomy, you could say, like from my experience, like in Abu Dhabi at least, even among like the royal family, some members I'm connected with, it's pretty organized, right? Like when they pass through the wealth to their kids, they set up, separate entities for each one, split up like the assets and whatnot. It's not like it's planned before even, so they don't wait for death or a will or something like that. They do it in real time, right? There's a big culture of entrepreneurship, right? Everyone is pushing through, both male and female members as well. There's no separation. In the UAE, you'd see, despite maybe the image or the stereotype, right, of Middle East or MENA, there's full equal rights, right? Maybe sometimes in political positions or media-focused positions, women aren't given visibility in some cases, right? But in terms of actual power and access and influence, it's equally spread, and it's organized. They always like to do best practices. It's not like up in the air. Yeah. My comment.
Yeah. Well, I'm loud anyway. It's funny you mention that because in our office, my aunt is kind of the head honcho, and always has since my grandfather kind of stepped back. He's since passed. And in ours, it's two boys, me and my cousin Elliot, and then my two cousins who are girls and my sister. And some are very involved, and some are not involved at all. Like Elizabeth, she's doing her postdoctorate work as a child psychologist. When I call her about family investment, she's like, whatever, John, just go. Whatever, I don't care. Emily wants to be very involved. You know, she wants to turn over every rock. She wants to see the due diligence documents. She wants to really dig in. So it's so interesting working in, you have family dynamic and business, and everybody wants something else. Everybody's goals are kind of aligned, but how does this work in like a foundation setting? So like, you know, being the next generation, one of my big initiatives has been trying to bring everybody together on whatever we can be together on. And so like our big charitable, like what everybody likes is we build low-income housing for seniors in rural Ohio through the HUD 209 program, which is no longer a thing. But that was always, everybody rallied behind that. And so now what's the next thing that we're all going to rally behind, right? Because the funding for that's no longer a thing anymore. So it's very interesting how from person to person, and I'm sure you see it with your family, everybody's so different and has such different goals.
I could comment on that, and I was going to mention something before when you mentioned the size of the family. Like with us, the size is like 30 maybe across, the cousins and like the kids. Also, that's big, and the communication style there is through, the majlis, if you've heard that word. It's the gathering on Friday of the family. So everyone aligns through that, right, on things they're gonna do, and everyone respects the family name. But at the same time, usually there's no like one foundation, right? There are a lot of things happening in parallel, and it's sort of an unwritten, oath or agreement that, people respect certain things, respect values, common values in the culture. So you don't see it as much as written, a constitution like you see in European families or American families, for example. So they're organized with the assets, but like with the governance, it's, like I said, entrepreneurial, but there's just this bond that they all respect, and, a blood bond, you could say, or something, a family bond. So yeah, it's a bit different, like a bit free form, rather than trying to be like one entity. There are many entities really in parallel, like a swarm sort of bees. Sort of. Yeah.
It's like herding cats. I mean, and everybody has such different goals. And how do you manage all of those goals under one umbrella and make sure that you're still having Thanksgiving dinner and Bob's not pissed at Ellen or whatever it is. It's a challenge.
That brings up, I guess we get near the end of the other thing we've seen with communication that's happened with next generations, and that is the expectation of real-time information, right? So we use a fairly robust technology stack to be able to communicate with our clients across whatever asset class they're in, right? They want to be able to, and they want to be able to look, they don't want to call us, right? We always tell people, like, if you want to know your performance, don't call me, click the app. And we joke about it, but it is the number of times I've been in a room with someone in their late 20s or early 30s holding a spreadsheet going, well, why did I get this? And the last thing they want to do is read it, right? And so that, to me, that's another huge cultural impact to speed of information, expectation of return, expectation of where did my capital go and what happened, and oh, by the way, I want to look at it when I want to look at it, not when I have to call you and find out about it. So the concept of being a gatekeeper for that kind of financial information, to my mind, is already gone. I think it's just a matter of who's going to catch up to it the fastest. So that, as you think about in this room, if you're advisors to or members of those types of families, those are really the kind of the foundational issues. And I know John's used to using the technology, but it becomes a way to improve that communication across generations and across family members. And that's been a huge boon to a lot of the families we've worked with, to say, okay, let's understand how we can all get on the same page. We know what we have, where it's located, and what it's doing, and what we're all getting out of it. Because to John's point and to Zach's point, not everyone is equally aligned on what their expectations are for the return on that capital. So I don't know how, I know, John, you've seen, the electronic stuff that we do. But I don't know, Zach, I mean, how do you, I mean, I presume it's an international communication too, right? So you're dealing with time zones and everything else as far as keeping people in the loop.
So you'd like me to comment on the expectations of returns or the communication?
Or just the communication, like being able to understand what you have and where it is and what you're doing with it.
Communication, like among the family or decision making, like I said, like it's pretty informal. The Majlis style. Everyone is like mostly in Abu Dhabi, right? There's a huge loyalty to the country, right? Like even though you travel or whatnot, like for vacation or work, but yeah, you don't live elsewhere. At least like that's the current culture. There's just like a deep love for it. Like so, it's in person. So to my previous comment, like yeah, I'm curious too, like how scalable this is in the future. If the family size increases even or not, or if people start living like in other places. It's a question for the future. It's not a current problem. But if it is in the same way, based on certain values, right? Values scale if everyone has adopted those values, because it's not limited by physical norms or like physical things, right? Or technologies even, right? So it's something for the future. In terms of like actually knowing the assets and portfolios, yeah, like I said, everything's like cutting edge, right? Like everything's documented, split up, etc. There's no like whatever a written deed that's lost or something. It's not like that. Like that's like organized as far as like the the back office, you could say. That's organized to standards.
Sometime I'll tell you a story about transferring an island in Greece. It's not electronic. Any questions? We got a few minutes here at the end. I don't know if there's any questions for anybody out there. Thoughts? Probably not from me, but from either John or Zach. Like I said, never do the panel after lunch. You can write that one down and say I told you. It's okay.
That's great. It's a full room.
Yeah, right. Thank you.
Come join our 361 firm community of investors and thought leaders. We have a lot of events created by the community as we collaborate on investments and philanthropic interests. Join us.